In this video, I'm going to be going over the difference between liquidity purges and liquidity runs. I do see some people having a problem identifying liquidity runs and liquidity purges. It's very simple, very, very simple, but spotting them can be very hard. And noticing them is you can just use other confluences to confirm whether it's a purge or a run. The confluences will tell you based off how the confluences form, how they're put together, and how price reacts with those confluences. So as you see here, we're on Euro on the 1 hour chart. Euro, US dollar, okay? And the difference between a liquidity run and liquidity purge, it's in the name, okay? So with the liquidity run, right? Let's just draw real quick. Let's say price is moving up, moving up, moving up, moving up, moving up, moving up. We got this final, and we got this entire move down, okay? So with this here, we have liquidity points up here. So what will we say this is? This is price purging liquidity. It's purging liquidity. Okay, now there's multiple ways price can purge. It can purge it consistently, which is this would be consistent purge when price is still going up purging. Because as you see, when we come up to it, it immediately rejects off. When we come up to it, it rejects off. When we come up to it, it rejects off. When we come into it, it rejects off. When we come into it, it rejects off again. Then finally, we have all this liquidity down here. Okay, so you can just say this point here or even this point here. Okay, so this would be the consistent liquidity purge or the liquidity purge run, which is this up movement here. So it's purging buy side, okay? And then we have a run on sell side. Now, why do we call it a run? It's called a run because we run past it. We don't come to it and then go back up. We run past it. So before this liquidity run, remember there has to be liquidity purge. Because if there's no liquidity purge, you're going to become the liquidity. Okay? If there's no liquidity purge, you're going to become the liquidity. Got it? If there's no liquidity purge before your liquidity run, you will become the liquidity. So, if we look again, this here would be the consistent liquidity purge of buy side. And then this, if you have like a break of structure or a change of state of delivery here, or I will be getting into change of state of delivery in the future, but if you look here, probably had some sort of confluence here, or break in market structure, or change of state to delivery, inversion for right gap, whatever you want to use as a confluence, you could have used this as your draw on liquidity, aka liquidity run. Draw on liquidity and liquidity run is the same thing, okay? And with draw on liquidity, some people may get this confused, but a draw on liquidity can result in a future liquidity purge, okay? Just to clarify that, a liquidity run is price running past a liquidity point. A draw on liquidity is where we know price is going to go to. Okay, that's where we know price is going to go to. It can still go to that point, but is it going to run through it or is it just going to simply attack it and or purge it? Okay, so draw on liquidity and liquidity run, it's kind of the same thing, but it really isn't. Draw on liquidity is simply where we know price is going to go to, but we don't know if it's going to run or we don't know if it's going to run past it or simply attack it. And with this example, we ran past these two liquidity points or all this accumulated sell side here. We were consistently purging or attacking buy side, and then we ran through sell side. Very simple, right? So now let's go through an actual example here within the candlesticks, okay? So if we look here, let's look here, right? Let's look right around here in this example. Why not? So you see we got these lows here. Got 1, 2, 3, 4, 5, 6. Still, points of liquidity. You can use any one of these points. These are the ones that are internal. This is the external one, okay? So, then we have this high here. See this little high right here? See that? Now, pay attention to what happens when price comes up to this high. You see how we come up to this high and we close below it? Right below the liquidity point? So that's indicating that a purge has occurred. And if we look, with a purge, what happens with the purge? Explain it to me. If you said with a purge, after prices came to a liquidity point and it rejects off, or whatever you said that's similar to that, you're correct. And with a run is when price runs past a liquidity point after a purge has occurred, which is this here. We purged this area of liquidity here, and then we immediately had a run below these lows here. We ran through all of this, completely ran through it. And then eventually later, we did come back up. But still, we ran through. We didn't go through it and then come back up. We didn't. We came back up a little bit, but we didn't have a purge. This was a run. So we had a purge here, a little miniature purge with the candle closure indicating that this is a purge. And then we immediately ran through all these lows here. Okay. Very simple, very, very simple, right? It should be simple because I'm trying to explain it in the most simple way. But let's go to another example if we can find one around here. So you see how we got these lows here? 1, 2, just 2 lows. Sell-side liquidity right here, or low resistance liquidity, if you would say. So we can mark this, we can mark this as low resistance liquidity, right about, I forgot where it is, sell-side low resistance, there you go. And then, if you pay attention here, look at this. Look at these highs. See how each one of these highs are getting closed below? See, when we came to this high, closed below. Came to this high, closed below. So the body is telling us that we want to go lower, okay? And what did we do? We purge the highs here, and then look what we did. We immediately ran through the low resistance lows. Now, we're not even including any confluences. We're not including anything else, okay? We're not, like, including break of structure, change of state of delivery, blah, blah, blah. But eventually, I'm not going to throw everything in just one video because I want to teach you things piece by piece and not just throw everything in one video and be like, what is this? What is that? How do I do this? How do I do that? I'm not going to do that to you. It'll be cool if I do that because I can just compress it down into one video, but each video is a step. Each video is one step or micro step or a learning step, okay? Because I don't want to throw a bunch of things in one, say, okay, how to predict liquidity purge, blah, 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 da, da, da. There are sectors. I'll be doing this within sectors, okay? So let's go over a bullish example of this. Why not? Let's go over a bullish example of this. If I can find a bullish example anywhere. Perfect. Look at this here. Look at this run here. This beautiful, nice liquidity void run. So you see how we have this high here? Right there? We could be paying attention to that. So whatever confluences we may use within this area, this may be a point of interest that we're looking for to get ran through. Now, if we look here, this piece of sell side right here, what did we do? We came straight down, purged it, created a liquidity purge, and then we had a what? You finish it. We had a liquidity run. Exactly. We had a liquidity run. So a liquidity purge, then a liquidity run. Like I said before, if there is no liquidity purge, then you're going to be the liquidity, okay? If there's no liquidity purge before your setup, you're going to become the liquidity. It's very simple. It's simple because price has to take out liquidity before going somewhere. It has to. It's like simply grabbing money before you go. That's what price is doing. That's literally all it's doing, okay? And even another example, if I can find one anywhere here, okay? It's very simple. Price is going to take out a low or take out some sort of liquidity. Down here, bow, purged, bow, ran through. Easy, simple, very, very simple, very, very simple. We came, purged the low, we came, ran the high. Very, very simple, very, very simple. I'm going to go over this again, probably one more time because I want to make this video really, really short, very, very short. It's about like 8 minutes and 16 recording this, but still, some good info here. If I can find another example. This is going to be raw recording too. I'm not going to edit this. This is just going to be straight raw. So straight raw recording. But if we look here, right? Around here in this area, you see how we came to this high? Kinda went above it, but we had like some sort of rejection or willingness to go the opposite way because you created this rejection block. And then what do? We had, I'm sure on a lower time frame there was some sort of run of liquidity, but we come up here, purge, and had a run down. Simple, very, very simple, right? Then here's another liquidity purge. We purged it with the lack of displacement. Remember, it doesn't have to be just a candle closure. It can be lack of displacement too. We have a lack of displacement, purging this high. And then look at that. We have a run on this low right here. That little low, we have a run right there. We'll run past it. Bow. Very simple, right? Very, very simple. Very, very simple. Then look, another one. Wow, they pop up everywhere, don't they? Yes, they pop up everywhere. Purge, run. Purge, run. Purge, run. Purge, run. But I hope this video gave you a pretty good example or a pretty good rundown on the difference between liquidity purges and liquidity runs. And enough of me talking, enough of me yapping. I'm sure I've done enough yapping for about almost 10 minutes now. But let's not make it reach 10 minutes. Enough of me talking. I'll see you guys in the next video. Peace.